ETF Inspector. It's Wednesday, May 21st, just about 7 o'clock at night. It's declaration day for Group B. That's what this video will be about. YieldMax is FBY is the one that's in Group B. But YieldMax's option income strategy funds, the monthlies, and the specific ones that we cover are AMDY, AMZY, APLY, FBY, GOOY, MSFO, and NFLY. All right, just before I start talking about how things went today, I wanted to point out that if these are the ones that you're here for, you like the monthlies, then I have created playlists. I'm starting to learn what I'm doing here. So I've grouped the weeklies, ALTI and LFGY, into one playlist, and the videos for these individual covered call funds that I just mentioned into another playlist. And if you didn't catch it on the video, I gave an update. Since these don't trade very frequently, I'm going to start just doing a weekly look ahead, and then a Wednesday declaration day, and then a Friday, see how everything ended for the week, as opposed to making daily videos that are not getting very many views, especially if I'm going to tell you the same information every day, since nothing changed within the fund. So, but it's been a couple days now. It's been since our week look ahead. So we'll go ahead and take a look at how things went. Overall, if you saw, the market was off to a good start, and then the bond auction did not go well. I know, what'd they say? 30 years went up over 5%, and the 10 years went over 4.5%. So all of a sudden the market didn't like that, right? Higher interest rates equals lower equities. So you saw kind of a sell-off in the stock market. AMD down 1.28%. YieldMax's fund 1.55%. Amazon down almost 1.5%. AMZY similar. Apple down 2.31%. APLY actually outperformed it, only lost 1.96%. Same with FBY, just barely beat the underlying Meta, negative 0.25 compared to negative 0.18. Google still had a good day, up 2.79%, with GOOY capturing almost all of the upside, 2.34. Microsoft down 1.22. The YieldMax fund outperformed it with a loss of 0.74%. And Netflix up 0.22, sorry. And again, the YieldMax fund outperformed 0.38. All right, so let's go ahead and take a look. We'll start with FBY, since if today you're in FBY, it's Group B's declaration day, you found out that they are paying a dividend of 63.69 cents, which comes out annualized based off of the closing price of 50.98%. So take your money to the bank and see if they'll give you 50.98%. They'll laugh at you, and they probably won't even give you 5. So we will take a look. So right now they've got 2,600 contracts creating their synthetic position. So they don't actually buy Meta. They sell a put and they buy a call at the same strike price, and then that mimics the movement of the stock up or down. Okay, so currently that synthetic is it would actually cost $4.8 million to close it out, but it's out till July, so we don't have to worry about that. Plenty of time for it to go up. Really, it's just to mimic the stock price and allow them to sell options off of it. Most of the money, as always, is sitting in treasuries. So if the percentage rates are going up, they'll start collecting a little bit more money as they open new positions there. And then we have calls sold for $645, $652.50, and $660. Right, you see these 760 contracts, 640 and 1,200. Each of these is worth 100 shares per contract. And then call it insurance. They buy a call So they basically just do a credit call spread. So they buy calls further out of the money to correspond with the ones that they sold. Overall, the ones that are sold are 1.4, 2.6, and 3.8% out of the money. There are 9.8 million outstanding shares, and the net assets of the fund are just under 160 million. Ignore that NAV for now, even though it pretty much matches up. That won't update until after I finish this video, and I update all these values tomorrow morning when the holdings download comes out. The way it works, the holdings download comes out in the morning to show you how everything ended the day before, and then the trades download comes out in the afternoon, well, in the evening. So currently, if we were going to have to close out all these options, that would cost $599,000. But seeing as how they are all out of the money, they will all drop down to zero and expire worthless, which is in our favor if the stock price stayed the same. FBY trades so far this week. Today was the first time. They had to close out. So what it looks like is somebody sold out of the fund. So this isn't them trying to make trades. So they had to buy to close their July 18th 660 puts and sell to, which is also to close their July 18th 660 calls, and close out as well the calls that they had sold and the calls that they had purchased based off of those. So there was there was an exit from the fund, so they had to close out the positions correlating with that. That cost them $340,000, but again, not really their fault. That wasn't them strategically trading. It was just I say somebody like it was one person, but people taking their money out. All right, we will get back into alphabetical order from there. Just wanted to start with that. So congratulations on it being Group B's dividend week. AMDY. We'll start with their trades again. They did their first trades for the entire week today, so this is why I wasn't making Monday and Tuesday videos. Totaling a net profit of $600,000. They were able to close out the calls that they had sold at 121. Obviously doing really well. Closed them out for 10 cents and sold out 118s for next week, next Friday at 138. Nice and cheap to close out, bringing in nice money to open the new one, and so they're made a good profit. There's 18 million plus outstanding shares. The fund manages $143 million. The synthetic value is at $5.6 million. It's out till July with a 110 AMD price. And let's see, so so they closed out the 121s. So the 121 doesn't exist anymore. The 120 is still in play. So we'll probably see them close that Thursday or Friday, but obviously it's doing well because AMD's at 112. So they're winning their trades for the week. AMZY. Oh, hold on, let me back up. And Group C declares next Wednesday. All right. AMZY. We'll look at trades first. Yesterday was their first trade, and they bought July 18th calls and they sold puts. So they had the reverse. Money came into the fund. So they added to their synthetic value and then added the corresponding options to go with them, selling calls at 207.50. So this is going to look like a bad trading day too, but they're not going to open different synthetics. They just added to the synthetic they already have. So, with the stock price of Amazon at 201, adding to their position at 185 is going to cost a lot of money. But big picture, their synthetic is worth $26 million. So this, negative 600,000 is really just because they bought more at the same synthetic price. There was an increase, so there you go, right? We just talked about that, of 250,000 outstanding shares. And this fund's growing, getting to $260 million being managed. Like I said, the synthetic's worth $26 million, so that's going to pay out real nice when they do close it out, but it won't be before your next distribution, most likely, because it's out till July. So 207.50 and 210 are where they have their calls sold, with the majority of them at 210, and Amazon's at 201. So if that stays the way it does, that will be an additional $700,000+ win by the end of the week. Okay, APLY, another one. So Amazon's and Apple's are both Group D, both declaring 2 weeks from now. They also had an increase, 600,000 shares, up to 9.3 million. There's 124 million managed in the fund. Currently, they have a 210 synthetic out till June 20th that is worth a negative $1.4 million. So they need Apple to grow above 210 before that time is up in order for that to not cost money to close. Let's see if they have any trades. Yep, so they made trades on Monday and then nothing Tuesday or Wednesday. So they added to their synthetic position 400 contracts at June 20th, 210. Just about broke even on that. They actually made a little bit of money there. Then they went ahead and added to the options corresponding with that at 212.50 being their sale price. And they closed their 215 for this week and pushed it out till next week and moved it to 212.50. Overall, I'm sorry, those were two different dates. So the increase in outstanding shares, increase in the synthetic, and the options to go with it were Monday. Today, they just closed out their call at 215 for Friday and moved it to next Friday for 212.50. So there was a win of 59,000 on Monday and a profit of 297,000 today. All right. We already talked about Meta and FBY. Google's fund, they're 21 days out till declaration, so it's going to be a little while. They've got synthetics at 160 that are currently worth 3.4 million. Net assets in the fund is 113 million. There was an increase of 350,000 shares, bringing it up to 9.5 million outstanding shares now. Their calls are just barely out of the money at 170 and 172.50, with Google or Alphabet at 168. So these are tight. So every day we get closer, this will decay because we are out of the money. So they should go to zero unless we go into the money. All right, GOOY, as some people like to call it, only had trades on Monday where they added to their synthetic position and then added to their 170 calls to go along with it, which overall cost them $61,000. Microsoft's fund, MSFO, Group C, they also declare next Wednesday. 6.7 million outstanding shares, $118 million in the fund. Their synthetic is at 435. That's currently worth over $7 million, but it's out till July 18th. So we're going to have to wait before we see that realized gain come in the form of the distribution. Their calls are 455 and 457.50, so just barely out of the money, 0.5% and 1%. They would cost over $1 million to close right now, but as long as the stock doesn't go up above that 450, they will expire worthless, and we will get to keep that money. MSFO has not had any trades so far this trading week. And finally, NFLY, covering Netflix, NFLY, some people call it, also will declare next Wednesday. There was an increase of 150,000 to the shares, bringing it up to 7.8 million. Net assets for the fund, 145 million. The synthetics at 1140, with the current stock price at 1194. So those are worth $7.3 million. And calls are sold out at 1220 and 1230 that are 2.1 and 2.9% out of the money. So once again, they would cost $400,000 to close out, but should go to zero so long as the stock doesn't get above that 1220. All right. That's all I have for you today. So brings us to the dad joke of the day. So before I do, I just want to thank you for watching. Please like, share, comment, subscribe if you haven't already. Help me get to the goal of 1,000 subscribers. All right. Today's joke. What's the difference between outlaws and in-laws? Outlaws are wanted. All right. Thank you. Have a nice night. Good luck trading tomorrow.